It's clear that there's a real, as U.S. investors proceed, obstacles to investing in Deutsche Börse companies. And the Deutsche Börse, to their credit, are beginning to look at that seriously and saying, we need to do something to make this a more, if you will, investor-friendly market. And so clearly, some of the things we mentioned before, the valuations are much lower. The liquidity is a real issue because, as you know, the U.S. investors, unlike, not really retail, we're talking about institutional, and they can't look at a stock that has no liquidity. It makes no sense for them. So those are issues. There's also a problem because what the German Börse wants to focus on, I mean, they got the Siemens and BMW and whatever, and those kind of companies, that's not their issue. What they want to focus on is get more high growth companies, whether in IT or in tech or biotech or what have you, to list on the German Börse, but they're not coming there because they're not getting that kind of valuation. And it's a little bit of a chicken and egg. You don't get the valuation, you don't get the investors. And U.S. investors are very, very specific. They know exactly what they want, and they have, when we meet with U.S. investors, as we did very recently, we were talking about that earlier, they have very specific criteria. And if a market like the German Börse doesn't meet it, they just pass because there are too many other opportunities. You may remember, I think it was about 7 or 8 years ago, the German Börse created the Neue Market. Well, that was a disaster. It just never took off. And they've, in a way, never recovered from that because the perception is they don't really address, like the AIM, for example, more of those kinds of companies. So these are issues that are part of it perception, but part of it reality. To the credit, as I said, the German Börse is now looking to make some in what I call IPOs list, in making it easier, in creating more liquidity and so forth. What they will ultimately do, I cannot say, but they are at least seriously looking at making what I would call very important changes that would change its attraction to U.S. investors.
The topic of this panel discussion, Janet mentioned already, is how to get investor attention in the U.S. and beyond. I think the existence of this conference is a clear proof and evidence that this topic is very, very interesting for many, very, very timely as well. Now, while nobody probably disagrees that it makes sense to think about investors abroad, I think it needs to be done the right way. And therefore, I'm very glad that we have such a diverse panel to talk about how it is done the right way. And with this, I would like to start introducing quickly the panelists. I will start to my left, Professor Lübbert, CEO of Biofrontera. He founded the company in 1997. Next to him, it's Gregor Ciesielcia. He's a founding member of Ciesielcia, Ross, Friedman, Ferenc, a securities lawyer. Then we have Adam Friedman, principal of Adam Friedman Associates, a communication specialist with 25 years and more experience. Then Jennifer Simmons, one of my colleagues from Edison. She's looking after investor access, helping companies to access investors primarily in the US. And next to me, Thomas Stevens, corporate strategy and communications of Bank M, again with a long experience in capital market transactions. I found one comment from Herman interesting. He said companies, for investors to invest, the stock needs to be trading in that currency. Now you take regularly companies from Europe to the US who may not be having an idea of listing here. What is your recommendation for these companies? How should they start communicating with investors? How should they start the process?
I think there's a couple different layers when you're starting an investor relations campaign in the US. I think you should start basically by making yourself as transparent as possible. A lot of US investors like to look around at companies, see their news flow, see if there's a PowerPoint presentation or an analyst report out. I think that also starting to develop relationships with analysts who cover international companies but have a good reputation in the US is very good. And then finally, I think that for non-US companies, it's very helpful if there's a certain type of hook. Maybe there's a major US investor. Maybe they have a big US partner. Maybe there's something that's important for the US that an investor can emotionally latch onto to develop a relationship with an international company. I also think it's very important to have somebody based here, work with an investor relations person, or have a strong relationship with your analyst, because a lot of times people in the US will, they want to talk to a person in real time. So I think that those tools can be very, very helpful if you utilize them properly.
Yeah. Adam, you're a communication specialist.
Yes.
What points did Jennifer miss?
Well, I certainly would agree with what Jennifer said. I might add to that things like, for example, a website, which is a really robust website, which many of these companies don't have, and may not even be in English. That's critical for a company that wants to come to the U.S. and find U.S. investors. Certainly having an address here, whether it's an IR firm or an individual, that's critical as well. Certainly transparency is important, and one of the issues is reporting. As you know, you can report semi-annually in Germany, but we're used to in the U.S. to quarterly reports, and that's an issue. And because if you want to track, you want U.S. investors to track your company and its performance, then they want to do it quarterly and not semi-annually. And they do want the kind of information that would be typically available for a U.S. company. Then there's the question of whether or not an ADR is important or not, and I think there's a lot of people that come down on both sides of that issue. Certainly, an ADR is a good thing and a positive thing to do for German companies if they're coming to the U.S. It's not necessarily critical, but again, it enhances the availability of the purchase of the stock, and that's important as well. So a combination of all these things are important to make it look like more and feel like more of a U.S. company and not just a German company. The final thing I would add to that is finding, if you will, peers, that is U.S. peers that are similar to that kind of the company that you're bringing over. So if you're in the biotech sector, or if you're in high tech, or whatever the area might be, to establish and make people understand that you're not a one-off kind of company, but you're similar to companies in the U.S., you're part of the peer group, that makes them be able to compare performance, technology, and so on with those companies, and that helps again to transparency.
But what are your views? At what point in the life cycle of the company should they think about reaching out to the US or any international market?
It will vary for every company in terms of when they want to access the US market. But very often, I think the IPO stage is where you want to be. I mean, IPOs, let's take it in Germany. How many IPOs were there in Germany last year? I think you can count them on two hands, whereas in the United States, there's been multiples of that. And that bespeaks of access and also risk. The risk profile here of investors, we have a greater tolerance for risk. In Germany, we know investors are risk adverse and tend to go to fixed income as opposed to equities. So I think it really is a considered decision, but an important one, to think when a company in Europe does an IPO, if they shouldn't do it here as opposed to their home country, because if you launch here as an IPO, one, you've got liquidity, and certainly an opportunity to have greater liquidity, and greater valuation. Whereas, and just statistics, if you look at the German Börse, just did some analysis, and since 2007 and 2013, first of all, the amount of U.S. investors in the equity market in Germany is about flat. Nothing that really has changed. Now, of course, we had the recession in between, and that had an impact. But the fact is, there isn't been significant growth. If you look at PEs, you're looking at a 28 PE in the U.S. versus about 12 in Germany. So that says to any company that wants to go public, well, I got to examine that. That certainly should be an option to be considered up front. If they're ready IPO, they should certainly be considering it, because there's always going to be a secondary, and any company that in that sector, technology, or IT, or biotech, etc., has an incredible appetite for money, and the place to get it, as Greg said, is here.
Adam, from your point of view, are there companies shouldn't come to the US?
Well, I think a company, for example, that it's sort of a basic manufacturing, or things that are I hate to use the word, but are not particularly sexy, or don't have, to use Jennifer's word, the halo effect, if you will, I don't think I would bother. I think it's just too hard, because you're going to have to climb uphill. And you want to go, like in every other investment thesis, where there's excitement and interest, and where the pools of money are investing. And they're not investing in things like I find basic manufacturing, and energy is another one right now, although I think that's going to change, because that's very cyclical. So I think you want to stick with the hot sectors, and that's where you go with that. And then you bide your time and wait, because there are always, the beauty of the U.S. market is that it's so vast, and there's so much capital here, and you can access it, but it gets harder to access if you're not in a sector that's on the rise, or that's frankly hot. And therefore, if I had a client that came to me in those non-hot, so to speak, sectors, I would say now is not the best time. You should probably wait.
I think the only caveat to that in manufacturing was China, where the manufacturing margins were so great, they could produce for pennies and sell here, that we were jumping all over anything. 5 years ago, when China was more in favor, we were jumping on anything Chinese manufacturing because they paid 50 cents an hour for labor, right? And
that's
so
changed.
and that's changed too.
Adam, you work with Deutsche Börse. What do you think, what keeps, from your experience in general, what keeps US investors from investing in Germany? And Gregor, you made the point in the beginning as well that there's little interest from the US investing in Germany. But Adam, maybe you start. What keeps them?
Well, it's clear that there's a real, as U.S. investors perceive, obstacles to investing in Deutsche Börse companies. And the Deutsche Börse, to their credit, are beginning to look at that seriously and saying, we need to do something to make this a more, if you will, investor-friendly market. And so clearly, some of the things we mentioned before, the valuations are much lower. The liquidity is a real issue, because as you know, the U.S. investors, unlike, not really retail, we're talking about institutional, and they can't look at a stock that has no liquidity. It makes no sense for them. So those are issues. There's also a problem because what the German Börse wants to focus on, I mean, they got the Siemens and BMW and whatever, and those kind of companies, that's not their issue. What they want to focus on is get more high growth companies, whether in IT or in tech or biotech or what have you, to list on the German Börse, but they're not coming there because they're not getting that kind of valuation. And it's a little bit of a chicken and egg. You don't get the valuation, you don't get the investors. And U.S. investors are very, very specific. They know exactly what they want, and they have, when we meet with U.S. investors, as we did very recently, we were talking about that earlier, they have very specific criteria. And if a market like the German Börse doesn't meet it, they just pass, because there are too many other opportunities. You may remember, I think it was about 7 or 8 years ago, the German Börse created the Neue Market. Well, that was a disaster. It just never took off. And they've, in a way, never recovered from that, because the perception is they don't really address, like the AIM, for example, more of those kinds of companies. So these are issues that are part of it perception, but part of it reality. To the credit, as I said, the German Börse is now looking to make some money in the way IPOs list, in making it easier, in creating more liquidity and so forth. What they will ultimately do, I cannot say, but they are at least seriously looking at making what I would call very important changes that would change its attraction to U.S. investors.
Actually, I would like to open it up for questions now. If anyone has a question for the panelists. Sorry.
Yes, actually, we've been talking about investments just into specific firms, but what about LPs for funds? Do you see there any potential there, like cross-Atlantic? Specifically, like, would it be possible legally and also factually for like American LPs to invest in a European venture fund, for example?
Well, I think you have to think in terms of, I think we're all saying in many ways the same thing. This is a marketing effort. This is not, and it's marketing and it's sales, and it doesn't stop. If you're going out there and you want investors, particularly U.S. investors, it's an ongoing thing. Your investor base will undoubtedly change, and it changes sometimes with more frequently than you would like, but it just means you have to continuously go out there and solicit investors, whether it's mostly institutional, sometimes retail, whatever it might be, but because the market is so frothy and the market is so large, so you're always in competition, and the competition is fierce, and everybody's jockeying for those dollars, and therefore that the sophistication of your marketing effort is critical, and I think that's what investor relations is all about. One of the things, for example, we didn't address here, if I may, is media. One of the things is visibility. Well, it's critical to, if you're in IT, you're in a biotech or whatever, there are vertical books, and of course, when I say books, I mean that loosely, but online and blogs today, and all kinds of social media that are addressing that particular vertical market. You have to go out there and get visibility, and you solicit that visibility. It doesn't necessarily come to you. And that's an important part of the whole marketing effort, what we call investor relations. Important to remember.
If there are no questions, maybe I would quickly ask each of the panelists to give a very quick outlook. Are there certain trends that they believe will change? If there anything, is it just going on like the markets are getting more and more international? If you just spend maybe very quick your thoughts on where are we heading? I would
Conclude by saying I think it's obvious here that clearly the markets are going global. There's a globalization of the markets, and it's particularly true in the U.S. More and more companies are coming in. It doesn't matter from where. They're coming from everywhere. And what we didn't mention is, remember, there's always political risk. For example, we have some Russian companies that are listed on the LSE, but there's issues now, and whenever we start a meeting, the first question is, okay, what about Putin and the Crimea, and et cetera, all the obvious questions. So it becomes 20 minutes of a political discussion, which has nothing to do with the business of the company. So there's political risk in some cases. There's currency risk, which is another factor that has to be taken into the mix. But I don't think that, or any of the things we talked about, is going to change that huge trend and that cascade of companies coming to this market. And the issue is, if you're a company, whether German or Europe, whatever, that wants capital, that needs capital, that wants all the attributes of a very successful public company, you need to have a presence in this market.
Good. Well, thank you very much. Would you join me in thanking all our panelists for the